Let's get to it. All right, back again, live. Journey to Financial Freedom. I don't even know what episode number it is, but it doesn't matter. Today we are going to be talking about retirement. We're going to talk about retirement dollars. We're going to talk about investing, retirement funds, etc., and what we should be doing, etc. And I'm joined by two great guests, and they're going to be here to join the discussion and give some insight. So first, before we go into the topic, let's bring in our guests here. Tom, Noel, come on in, guys.
Hey! What's going on?
What's going on?
Oh, man. Boys are back here, man. I got my boy, Dr. Noel Liu. I got my boy Tom here. They're from we're related groups. We're good friends groups. We're family. So we want to bring these guys on every so often. I'm very there in their group as well. So Tom, Noel, how the hell are you guys today, man?
Good. Noel, go ahead.
No, doing great. For people who don't know me, I'm Noel Liu, and I'm a general dentist based in Peoria, Illinois, middle of nowhere, central Illinois area. And my good buddy Tom and Jonny Walker. So really excited to have this conversation with all three of us again. So Tom, I'll pass it on to you.
Hey guys, so excited to be back with Dr. Jonny Walker here, a good friend. We partnered on deals. We've had a meetup together. So excited to come on with also my good friend Dr. Noel Liu here. We do our own show, but once in a while we join hands and we partner up and do this. And this always ends up in really exciting topics, and people get a lot of value out of this. So I'm excited. My name is Tom Bibby. I'm based in Houston. I was in the middle of nowhere in Chicago. I'm kidding. I mean, that feels like a place of middle of nowhere with all the snow and everything. People are getting out of Chicago. So I got out too and came to Houston a couple of years ago. And I'm an entrepreneur. I exited one business. I have a couple other businesses and also heavily invest in real estate. I started with 6 units, now grew to over 1,000 units, and that's my story. And I hope the same will happen to everybody who's listening too. So very excited to join Dr. Jonny Walker today.
Thanks for being here, guys. So exciting topic. I mean, retirement funds. As doctors, we are just kind of going to default, like, hey, whatever everybody else is doing. Oh, 401k. Right. I know that was me too. Right. I mean, we'll get into this. I did a SEP IRA because I asked my accountant, you know what I asked my accountant one day? I said, hey, I'm paying all this money in taxes. Like, what can I do to save money on taxes? And the only answer that he gave me, right, was get a SEP IRA. So I said, okay, cool. How much can I put in? He said $58,000 a year. I had a pretty very high income as an endodontist, and I'm like, well, $58,000 doesn't really push the needle at all, but I'm like, all right, well, he's like, well, you got to pay tax, man. That's all you can do. So I was led astray. I think a lot of us are, and we're not told, and we really pay attention to our businesses, right? Noel, I mean, growing our businesses. I mean, you grow an incredible dental business, and we put our focus into that, and then we kind of put the retirement stuff on the back burner. I mean, I know a lot of us do that. 100%. And it's like, hey, look, we put in our 401k, we put our money into the SEP IRA, other types of IRAs and things that we can put in, and then that's it. And then, hey, look, whatever happens. But before we get into the retirement stuff, I mean, let's do a little bit of talk a little shop here, man. So I mean, you guys are working on some stuff that you guys are working. I see anything you guys want to talk about in terms of what you guys are working on now. I mean, let's before we get into the topic, I want to catch up with you guys a little bit. See what's going on. This is a live show, so we can go on whim here.
Yeah, Tom, you wanna take over?
If you guys want to what deals we have going on right now?
Anything you want to talk about? Yeah, sure.
I mean, one interesting thing that recently that came across Noel and I, we were very as you know that Jonny, you're into multifamily big time. and we are too, and we also did storage units and all that stuff, but we were not very fond of short-term rentals as an investment option, right? The reason being, yeah, the returns are high, but it's management heavy. Like when guests come in, you got to text them. Somebody leaves, you got to send the cleaning crew. It's a lot of management. Yeah, you can make 4 times the rent, but there's a lot of management issues. However, we partnered up lately with George Salas. He's a king of short-term rentals, who's got like 40 rentals or something. And we have been doing some rentals with him, and we're getting about 12 to 15% return on the money that we put in. So we've got one opportunity that's ready in Houston, and if anybody's interested in making 10 to 15% on their projected return, you should reach out to any of us. So yeah, we're
sure.
excited about that.
Yeah, that's short term. I know George. I know George really well, and I know his model. So
That's
yeah,
good.
it's a pretty good team they put together too, right? A pretty robust team. I met the other guy. I forget his name now. The guy with the big. Is it Wayne? The guy with the hair, the big hair, and the big beard?
Wayne. Yeah.
Yeah, I just saw him in a conference. Actually, I saw him and George at in what was it? Phoenix? Yeah, I think it was Phoenix.
Yeah, you guys were at the conference, right? He said, yeah, I think it was Phoenix, right?
Yeah, that was Phoenix. Yeah, correct. Yeah. So, yeah, and they came and I've seen their deals, I've seen their stuff, and yeah, it's a really pretty interesting model. So I'm glad that's working out. So, and plus they have a kind of they're building a track record as well, right? So they have several deals now, right? And they have but I really was kind of impressed by the team they built. There's a lot of good skill sets between all the different partners that are involved. So yeah, pretty good model. All right. So what else is going on? So I know in the world of multifamily, I mean, yeah. So multifamily, I mean, what are you guys hearing about multifamily? Rents have kind of slowed down, right? Even negative rent growth in 2023. What do you guys see in 2024?
Before we dive in, let's talk a little bit about the state of multifamily investing.
Multifamily, you're right.
Let's talk a little bit about the state of it. Where are we? Where the economy is heading? Where the interest rates are heading? Because right now we heard that the big boys like Goldman Sachs and those guys, they're coming back in. What are you hearing?
Yeah, I've heard the Blackstone. All of those big boys,
right.
Institutional capital sat on the sideline, right? For all this time, they stopped with multifamily.
So what's happening? What's changing? What's the dynamic? What's the condition rate?
Well, everyone is anticipating interest rates going back down, right? Everyone is anticipating interest rates going down, and then that usually follows cap rate compression, right? Values start going up again, and so also we're gonna see. I think we're going to start to see rent growth again. And the reason for that is that rent stopped, went plateaued and went negative in Houston, even negative 1%. But it went plus 23% in 1 year before, like in 2022, right? So it's almost like it overshot equilibrium, getting back to normal. Plus we had an enormous amount of supply come on the market, right? There was a 40-year high of multifamily units, or 20-year high of multifamily units in a year. 1 million brand new units came online. That started to obviously supply, right? So now all of a sudden you increase the supply a lot. This also has downward pressure on rents. But that supply, now construction stopped again. When interest rates went up, there was no new construction projects starting. All the stuff that was in progress finished, but that was it. So now we're going to start to see the supply start to dwindle again over the next 5 years. The new supply that came on is going to work its way through. There's still a shortage of affordable housing, and we're going to still places where people are moving, jobs are going, like in Dallas, like in Phoenix, like in Houston. Those are all places love to invest. The rents are going to continue to be healthy, and they're going to continue to grow. I think it's going to get back to a more normal pattern. So I think that's why when these institutional capitals, they have these analysts and all these people that can go in and analyze these markets at a very minute details of economic forces and all these different indexes and all that. And they're saying, hey, this is the time to go in. Then we can follow their research, right? I mean, the thesis behind multifamily still remains very strong.
What do you think about migration? Do you think that's still happening?
Yeah, I mean, absolutely. I mean, the big demographics are job growth, right? Like, I mean, jobs are going, and Dallas is still have Fortune 500 companies still moving there, right? They have a diverse economy. There's tons of different employers. It's not dependent on one thing. Like people say Houston is too oil dependent, right? Like, so a lot of big investors, they'd rather go Dallas than Houston because they're saying it's too energy dependent. I would argue that, there is a lot of diversity in Houston as well, with the manufacturing, food. It's the second largest producer.
But
of
do you
food
think migration has it plateaued, or like has it come down a little bit? I mean, with all the, what do you think? I mean, what are you seeing?
Maybe I don't know, maybe, but net migration is always happening. That never stops. It's continuous dynamic. There's always declining markets where people are leaving and they're going somewhere else. And you're going to places where there's jobs going, right? Like Phoenix, Taiwan Semiconductor Factory company is building a $40 billion project there. That's going to bring another 20,000 jobs.
Yep.
Right? Like these type of huge employers like that just keep moving in. I mean, that's not going to slow down. And if that's happening, people are going to continue going looking for jobs, right? And that median incomes go up, populations grow up. So those basic macroeconomic factors will drive rents, right? That's just what happens. It's historic.
Okay, good.
But yeah, let's jump in now, guys. Let's jump into our topic.
Exactly.
Here.
Let's do that. Right. Since we know like migration is happening, Goldman Sachs is getting back in. Now we need to speak about why.
Also, one thing happened today, guys. So today there was a Fed who came out, and today was a Fed meeting. He came out and announced that we are still on course to lower the interest rate by three times this year. Which actually, and Jamie Dimon, and they all said, don't do that. But he still said, we are staying the course. We are going to lower it 3 times. I was surprised about that too, because I don't think inflation is slowing down, but they apparently.
Inflation is still, it's still there, right? And inflation's still sticky. It's a lot lower than it was before, but it's still above their 2% target rate. So yeah, that's, who knows though, they might give rate cuts, and then if inflation's not under control, they start raising, or they don't do any more cuts. Who knows, right? So it's something we got to definitely pay attention to. I don't think it's going to be a one-way street where interest rates are going to go straight down. Who knows, right? Like, but let's not speculate. Let's get into investments with well thought out debt, right? Debt products. So that way you can kind of weather the storms of uncertainty. But guys, let's get into retirement funds.
Let's do it.
Let's do this. We gotta. Well, let's come back again and talk about this stuff. We can talk about this stuff all day, guys. You know that when we get talking on it, we can talk for hours. But let's save this discussion for another. It's a very good topic, and I think we should discover it. But let's talk retirement today. Now, at the onset of this thing, I said that most of us, like for me, it's like, okay, well, put your money in 401k plan. Now I have a 1090. I had a W-2 income that I had a 401k plan. I had 1099 income that I was told the only way to save taxes was SEP IRA. So I did that. And that was it. And I never really thought anything more about it. Then I just was investing in real estate with all the other savings and working and all that. And I just put that money in and I didn't think about it. And then a light bulb moment happened when I learned about other things that you could invest in that you aren't told by your financial advisors. You're not told by your accountant. Nobody tells you about these. And they're not incentivized to tell you about them. And that's why they don't ever tell you about it. But I mean, before we go into those products, I mean, Phil, what do you got? What was your experience, Noel and Tom? I mean, we were talking a little bit offline about Roth IRAs and stuff like that. I mean, traditional stuff. What did you guys start with when you first started? Putting money into these retirement.
For me, it was pretty simple. For me, it was pretty simple. Like all these financial advisors, they're just speaking about one vehicle and one only, right? Like, how do you take your income and how do you diversify it? But little do they tell you what do you do after that. It's like you just take it and put it in the market and just let them handle it, and they will be the ones who's going to be making decisions on your behalf. And that is all we learn as doctors and dentists. The key is, what we want to discuss today is, how do we take it out of that traditional vehicle and how do we control it? And that is, I think, an exciting topic, because this is something which we've been exposed to all our lives, like since we started working. Tom, what about you?
Yeah, this is very, very interesting because, like you guys said, nobody ever told me about these other alternative investment options. And the reason is they're not incentivized, and that maybe they don't even know. And now it's also they're selling their products, and they get like 3% every year. Somebody said, I don't know if it was Tony Robbins or somebody said, if you just stop paying that 3% alone, you will come out like you will make an extra 500,000 over a 25-year period or something. So they're making off of that. Whether you make money or not, they'll get their 3%, right? So now, one good advice I got when I started the career is I didn't know anything about investing, nothing. I just walked into a Bank of America, and then there was this guy there. He said, you have to invest in Roth IRA. At that time, I could invest in Roth IRA because if you make over a period amount of money, you cannot invest. So, and he said, hey, that time was $6,000 a year or something. So I kept doing that for like over 10 years or 15 years or something like that. Because he said, the tax rates will always go up when because now it's at the lowest, but it's going to go up eventually because the country obviously.
That's the selling point.
Yeah,
right.
Exactly. And then, because the country is in debt. They need money, so they're going to tax you at a higher rate later on. So he said, whatever grows, you're not going to pay a penny. So I kept diligently investing until I could not invest anymore. Then there is other forms then I went to the CPA. He said, just like you guys, he said, man, max out your 401k. You can do SEP IRA, and then you can do backdoor. This is all he said, nothing else. And there's no other options that he said, Then I had to do my own research and find out like other forms of retirement, backdoor IRA, you can do SD IRA, all that stuff.
Yeah. See, so you had pretty much the same experience as me. It's insane to me that this is all that we're told. And I'm like, I still can't understand why they wouldn't even offer, hey, what about tell us about something else. This is all there is.
Yeah.
And that's what boggles my mind. That's part of the reason that I had to make this platform, right? Like, listen, we gotta take this, we gotta get this power back to Main Street here. Because Wall Street's hijacked this thing, all these retirement funds. Now, 401k plan, I did a whole video about, that's a big scam. I mean, you guys alluded to some of the stuff, the fees alone, right? Fees are huge wealth crushers, huge compounding crushers. There's AUM fees, there's fixed expense ratio fees. These guys are collecting their fees even when when they lose money. They lose you money and they still take the fees. That means they're not even taking it as a percentage of the profits or earnings. They're taking your principal.
Yep.
After your things already go, after they've lost your money, right? This has huge crushing effects on building wealth. And there's a complete misalignment of interest, right? These guys, their goal is for you to lock up as much money into these plans and never withdraw it and keep it there for long periods of time. That's what their goal is, right? Their goal is for you to do that. And the thing is, they may not be even participating in the same stuff that they're selling you, right? They're just doing it because they can collect their fees. So there's a misalignment of interest because they're getting paid regardless of whether they make money or not, right? It's like, and then how many people actually take the time to look at a 401k plan and where's your money going, right? Who's the fund manager? What's his track record, right? How long has he been investing? What has he done for other people? What is his strategy? Right? I mean, how many people know that? I definitely didn't know. I just knew it was a 401k plan. Oh, that's it. It just goes away into this magic box and they're going to make it grow for me. And the thing is, if you look at what your money goes, it doesn't even grow anywhere, right? Like I had my money in a 401k plan and I was putting money in after 10 years. It's like, nothing. It's like almost the same amount as the money I just contributed, right? Like it almost went nowhere. I'm like, if you want to retire off of a 401k plan, like you're going to be working until you're 75 and hope you only live till you're 80, right? So that's that, right? So now I figured it out, Tom. I figured it out on my own too, just like you, right? Like just by happenstance, I was listening to a podcast, and it's like I heard about this guy came on, and he was talking about these qualified retirement plans. And then Ramez Fakhri, right? He's been a guest on both of our channels. He's from the self-directed IRA club. He comes and talks about self-directed IRAs, and it's like, whoa! There's this way that you can do. First of all, first of all, I'll let you guys talk about it. What is this? What are some of the alternatives, right? Like what are you using, Tom? And why? And what can you do differently than money that you can put in a 401k?
So what I think everybody should be doing is this is the path, right? So you should think about how minimally you can pay taxes in retirement or as soon as you withdraw money. Legally, yeah.
How much?
Yeah, legally. By the way, I'm not a financial advisor, and we are not giving you any advice. This is all information for entertainment purposes only, right? So
we're discussion purposes, yeah. And entertainment
exactly.
too.
So you should take your 401k. I would convert a significant portion of that into Roth IRA, and that means you will pay a tax. You will take a tax hit, and you will when you convert it. So maybe you convert a little, like 20,000 a year or something, because your 401k is a trap. You will end up paying a bunch of money on taxes when you withdraw eventually. Convert into Roth, and then that Roth, whatever it grows into, like if you have 20,000 today, and in 10 years you have 50,000, that 30,000 you will pay zero tax. You can do whatever you want. And then in that Roth, you can decide what you want to invest in: stocks, bonds, or real estate. If you use it self-directed IRA, you convert that into a self-directed Roth IRA, you will not pay any taxes on that. So my plan right now is to convert every retirement traditional that I had, 401k, that I think everything I converted already, into a Roth IRA and a self-directed IRA, so you can do whatever you want with that. So eventually you will not pay any taxes. That's what I'm doing, and it's not investment advice.
Yeah. What about you, Noel?
So I've always been staying away from vehicles, all these traditional vehicles. Now I'm looking into how do I take my money and indirectly put it into either solo 401k or SDIRA. So I feel, Tom, I don't know about you, but you are like a SID IRA guy, right? I kind of feel the solo 401k is a way to go. But however, my CPA told me that I cannot qualify in my current business unless if I have another entity that if I go by.
That's the problem. That's the problem with solo 401ks.
Right.
You have to be the only guy, I think. That's
correct.
Yeah.
That's what he said. I got to be the only guy. I can't have employees.
You have a company, right? Like, so yeah, I have an independent contractor as an endodontist, right? That was an associate that I work in other people's offices. Okay. I get a 1099 income, and that is basically a business on its own. Yeah. Right. So I'm the only guy working in there. That's why I qualify for that solo 401k, or QRP as it's called, also a qualified retirement plan.
QRP. Okay. Yeah. Well, as a non-tax CPA guy, my advice is if you can get into solo 401k, that's the route you probably want to go.
I agree with that. But many people, like we said, won't be able to unless you get a lot of 1099 income. And you have an entity with you as the only person, then it won't work out.
I think this is good for like associates, right? Specialists, especially specialists, or even general dentists. If you are in a state that you can get a 1099 income versus a W-2 income, which you can in some states, and it's banned in a lot of states, like in New York and New Jersey. You cannot get you have to be a W-2 income. You cannot say that you're an independent contractor. But in the state of Texas, for example, you can still get a 1099 income, and you're still considered an independent contractor. So it depends on the state, but it's definitely worth looking into because, as Tom and Noel were saying, so what I did is I rolled over I learned about from podcast. I got in touch. I got information about a qualified retirement plan or solo 401k plan. The solo 401k plan or like qualified retirement plan is better than an SDIRA because you can have more contribution to it.
Right.
You can contribute more per year. And there's one other thing is that you don't pay a tax called UBIT taxes on where you do pay taxes with a self-directed IRA. So any leveraged investments, which all real estate is, you do actually pay a tax, Tom, on a small amount. It's called a UBIT tax. It's called an unrelated business income tax. So any leveraged real estate, you have to pay a small tax. Whereas the 401k plan, you don't have to pay that UBIT tax. But without going too much into the minutia about it, if you can get a solo 401k, what makes it so powerful and way more powerful than a SEP IRA or anything like that is that you have the ability to not only see when you're in a SEP IRA or a 401k plan, you are limited to what you can invest into, whatever they tell you can invest. Right? So whoever's managing those funds, they say you can invest in whatever you want as long as it's this, or this, right? Like that's how those 401k, and they're all it's all correlated stuff. It's all market correlated. They're all paper. It's all stocks or the likes, right? Equities. Yep. Now with a SEP IRA, SEP IRA, with a solo 401k or SD IRA, self-directed IRA, for the sake of this discussion, let's say that they're the same. Okay, so there are some differences, but for this discussion, SD IRAs and QRP, same thing. Now, with that, you can take that same money. Say I have $1 million in my SEP IRA, I roll it over to this new retirement vehicle. There's no penalties because you're not taking the money. There's no taxes. There's no consequence. It rolls over in a like-to-like retirement plan. It's qualified, so it goes into, so that $1 million rolls full million into this new retirement vehicle, which are the two things we talked about, right? QRP. So in my case, I have a QRP or a solo 401k. Now that money can be invested in a whole plethora of things. Basically, a lot of different things that you can't ever fathom investing with your SEP IRA. You can take this money and invest in real estate, like you said. You can buy land, right? You can flip houses. You can go buy a house with your retirement money, go work with a flipper, and they have to do the work. You have to be a limited partner. You cannot be an active part of the invest with retirement funds. So you have to, you can only invest as a limited partner, right? As an LP, as a non-participating person. And you can go and flip houses and get a flipper and go and do houses and flip houses and get percentage of the profits. The profits come back into your account tax-free, right? There's no capital gains tax. There's nothing. And so that's one thing. So you can invest in land. You can invest in syndications, right? Like which we talk about passive investments. You can invest in that. You can invest in physical gold and silver. Literally, with your retirement funds, you can go buy an ounce of gold. If you are going to buy gold, I suggest you buy them. If you're buying small amounts, keep small denominations in gold coins. If you're a big baller and you're buying bars, buy bars and keep them, right? But it's always better to keep them as coins because you have utility. If push comes to shove, the dollar's worth nothing and we have no financial system crashes, well, guess what? We're going back to the 1300s, and gold is what we use to pay our rent and buy our groceries, right? So that's just one little thing. So now that's another thing, and you can literally store the gold you can keep it in your house, or if you want, you can keep it in a third-party place where they lock it up in secure fashion, right? So that's physical gold. You can buy fine art, right? Fine art with your retirement funds. You can go and buy a beautiful piece of art and enjoy art and with your retirement funds, right? So you can invest, and if you want to invest in stocks too, you can still invest in stocks. Nobody's stopping you, right? You can take literally, and you have check writing ability, right? You literally control your retirement funds. You literally you can buy Bitcoin. You can buy cryptocurrency. I have a couple of Bitcoin that I bought with my retirement funds, right? And I'm not going to touch it. I just keep it there.
Wait, so Jonny, so You're saying with the solo IRA, you roll
So
it
yeah,
over
yeah.
into a SD IRA. Is that right?
No, I went from a SEP IRA now into the
Into a
401k, like not
solo
so
into a
into
solo 401k.
solo 401k
And you
QRP.
can
Yes,
buy real estate, art, Bitcoin in that. Or do we have
yes.
to do a self-directed convert? No, we don't have to do that, right?
No, that's a self-directed IRA. You can do that similar type of thing also, right? There's no custodian.
So in this one,
And
you don't need to.
you're not paying any fees. So there's no assets under management fees. There's no fees now, right? Because you're actually managing your money. So
So let's say. So let me ask you a
um,
practical question. So let's say I have 100,000 sitting in a solo 401k account in, let's say, Charles Schwab or something, right?
no, it'd be in your bank. It would be it's in a bank account associated with your plan.
Solo
It's a bank
401k or
account.
SEP IRA?
Solo 401k.
Okay.
I'm talking right. So I can go. I have a bank. There's a bank, right? Solera Bank. I will go onto the Solera Bank. I have the app. I can log on and see my funds.
And so then
my-
how do I can I only transfer it into one of these, like Bitcoin, or what if somebody withdraws the money? I mean, isn't that?
Yeah, so you can't. Yeah, you cannot ever take the money. You can't withdraw it. So, like, even when you invest, like Bitcoin, you have to open an institutional account. You can't have a personal account. You get an institutional account that's linked to your retirement,
Like a Coinbase. So you open a Coinbase account and you move the money from your bank into this. That's it. That's pretty damn easy.
That's how I buy Bitcoin. I literally buy Bitcoin with my retirement money instead of just putting in some bullshit stocks market, right? Like, yeah, you know, guys, I know how I feel about stock market. So I buy Bitcoin, right? I've invested in syndications, right? Apartment buildings, which I love. And now the cash flow, the income, dividends go straight back into your solo 401k, into the bank account, right? The cash flows go back and accumulate there so that you can reallocate it in somewhere else, another deal, right? So after I learned about this, I'm like, what? Put every retirement dollar that I can possibly do into this thing, so I can just invest in this stuff.
Hey,
right?
let's talk about this here. Like somebody who has like a traditional IRA, or they have like, like a Roth IRA. What's their next step? Like, how difficult is the process to convert to one of these?
I don't know, right? Like this is after I found out about this so far. Okay, I called the company, and I'm more than happy to share the link if anybody wants. Just reach out to me. I can send you an introductory email to the folks at the EQRP.
But it can be done, right? It can be done.
So as long as you qualify for it, right? Like we talked about, you have to. As far as I know, Tom, right? Like we have to be independent, solo in a company, right? You're the only person in the company to do a solo 401k plan, which is a qualified retirement plan or QRP plan.
And like Tom said, if that doesn't work,
the thing is about
go to SD.
Is that your financial advisor, like my financial advisor I never even heard of it. Right? They do all these Series 7, they do all these different exams, this and that, and they never learn about a QRP.
Yeah.
QRP has been around since 1978, but nobody knows about it.
It's not in the interest.
Because nobody tells you about it. And the guys that are in the matrix, the ones that are incentivized to sell you these products, they don't know about it because you know why? There's no money to be made from it.
Yeah.
They have nothing to gain if you take your money and put. My financial advisor was pissed off at me that I took all that money out of the SEP and went to the EQRP. Right? He stopped talking. He used to take me out to fancy dinners in Manhattan. Right? Like very periodically. And
the 3% is.
I paid for those dinners, man, but I don't go to them anymore now. I don't get invitations for those dinners anymore from this guy. So, that, and to me, it's like, I still can't believe that nobody told me about this, right? There's nobody. I had to just learn about it in the school of hard knocks and find out about it and go and learn about it. And It's like, wow, boom. This changes everything, right?
Yeah.
You can build wealth. You're not paying taxes on it. You can invest in real estate, which I love. I love to have the majority of my retirement funds in income producing real estate.
Absolutely.
I love that way better than leaving stock market. I have $0 in the stock market now. Some people say I'm crazy. Some people say I'm crazy. Maybe I am. But I have Bitcoin, I have cryptocurrency, and I have a lot, and I have real estate. That's it. Right? 80-20, 80% is cash flowing. It has to be cash flowing assets. I'd go by 82, but the Palermo's ratio, it's 80-20.
Pareto principle.
Yeah, Pareto. 80% goes into low risk cash flowing assets, large apartment buildings, and other types of quality assets. The other 20% you can allocate into higher risk stuff, right? So that I invest in some businesses. I try this, I try that, but and Bitcoin, right? I've done some other private investments, stuff like that. But that is, hey, look, if you lose it, you don't. Some make it, some don't. It turns out that you make more money, whatever. But you're not overexposed at anything, right? But at least I got some exposure to Bitcoin. I'm not complete FOMO, right? But it's like, hey, this Bitcoin's gone to 250,000. I'm like, okay, well, great. At least I got 2 Bitcoin, right? At least I got something. And so, to me, do you see any disadvantage of this? I mean, what's a disadvantage of doing this? To me, I can't find any.
Yeah, I mean, there's no disadvantage. I mean, real estate, you're pretty well diversified because it's income producing. It's real assets. It's real building, people, tenants, leases. How can you lose out on that? So, I am invested also in stock market as well because I started that game before. But I'm not putting all my money in there because you can't know what's going to happen. I mean, it could be up a lot. Right now, it's actually up a lot in the last 3-4 months.
With a caveat, everyone says it's going to come down, and it's not going.
Yeah, in the 3-4 months, it went up like 30-40%. I mean, it's when you think it's crazy, it's getting crazier. That's how it is. Like Nvidia stock,
Yep.
it was like 500 billion or something, or 400.
But the period of time that when it jumped in value, it was 12 minutes.
Yeah, it is.
Even if you were watching it every day, it's like if you weren't paying attention for that 12 minutes when it just went skyrocketed. And that's why it's an insider game. But guess what? There's a whole bunch of people that knew about it and they were in heaven, right? Inside
Nancy Pelosi.
Yeah, little guys like Main Street. We don't have. This is a game for the bigs, right? The stock market and Wall Street. That's for the bigs. The little guys don't. The bigs are the bigs are the ones that they manipulate the market, right? They manipulate the market, the masters of the universe. And it's like when you're in the stock market and you're a little small retail investor, you're just at the whims of the giants, right? Like you're just hoping that you happen to catch on at the right. You're there at the right, and you're moving with them, and that's. To me, there's no predictability. The volatility I don't like. I don't like. There's no income. There's no cash flows. I mean, there's no tax benefits.
Yep.
I don't like that feeling. I like the fact that I know that my money is invested in this deal. I could go drive by that building to see if the lights are on in those apartment buildings to make sure there's people living in there. If there's people living in there, then I know that I'm going to be okay. Right. I know that there's income that's going to come in. And, some of these buildings, and I just thought about it. I went to visit my parents a couple months ago at the old house in Canada, and the apartment building that we used to live in is still there. Right. 35, 40 years later, that property's still producing income.
Exactly.
Never stopped.
Yep.
It never stopped once. There was people living there for the entire 40 years.
Wow.
Paying rent. Yeah. Whoever owns that building was collecting income and collecting millions and millions of dollars. And it's like.
So let me ask you this. What do you think happened to the value of the property?
Oh,
since the
yeah.
time you were there.
Rents. My parents were paying $150 a month in rent at that time.
Right.
I mean, rent. I don't know what the rent is now, but if it's
No,
2000.
exactly. That's what we say. Like real estate always have ups and downs,
and it's got
but it always
100
keeps going up.
Yeah.
Yeah. It always keeps going up. So let me ask you guys this. What is the disadvantage of these self-directed IRA and full solo 401k? Like if they were so good, there gotta be something bad about them too, right?
Yeah, I can tell you what I think.
Yeah,
And-
let's do it.
Yeah, and that is that everybody's not a professional money manager. None of us are, right? We're not taught. We haven't got training in this stuff, right? Like investing money. We don't know, Bitcoin and all that. We're kind of just taking it, we're trying to figure it out, right? Like, so I would say that it takes a lot, but to me, the way you counter that is by doing research, right? The stuff that you want to learn about this day and age, you can go listen to podcasts, you can go listen to YouTube. You can watch YouTube for 2 months on any subject, and you just listen to podcasts and you watch YouTube videos for 2 months or 3 months. I guarantee you're an expert in that topic. And so, that if you're interested in and the thing is, if you don't want to put a lot of thought into it, you don't have to. Like, you can still go invest in the stock market. You can go buy index with you, right? You can get into ETFs and all the other regular stuff that those guys will put your money into anyway. They're going to put your money into the same things, but now you're not paying any fees on it. So you can still say, hey, I'm going to put 50% in stocks, but I'm also going to put 25% in real estate, in great passive investments. Right. And then I'm also going to do, as long as you are moderate and you have a plan and strategy, not a shotgun approach. I think this is, so there is a disadvantage that I think that's it, Tom, and now that's another thing that, maybe a busy doctor doesn't have time to do. Right. Or, hey, look, I'm scared to do it. I don't want to do that. Right. But to me, that's a mindset thing. And you're doing a great disservice to yourself and your future self and your family if you don't take control, take the bull by the horns. I mean, if you have the ability to supercharge your retirement dollars and pay very little taxes, well, guess what? That's the name of the game that the wealthy people play, right? So if you want to be wealthy, you should emulate wealthy people. Wealthy people do not have 401k plans. I promise you. They don't have SEP IRA plans. I have not heard one. And I don't, in this business, we talk to a lot of successful dentists, talk to a lot of successful real estate people that have worth a lot of money, a lot of zeros behind their name. And not one person has ever told me that a 401k plan or a SEP IRA is part of their strategy. Never. I mean, what do you think?
You're spot on that one for sure.
Yeah.
1000%. 1000%. One thing I like about this today's conversation is everybody knows they can actually take their regular, investment vehicle and just convert it into one of these, self-directed ones. The only downside for me, I would say, is probably knowing the rules. Right.
Yeah, I was thinking the same thing when you were saying that.
So now you do have help with that, right? Like, so with
right.
Yeah.
Exactly.
Within the company itself, 401k plan, they're going to tell you can shoot an email to them and there's an annual fee that you pay. I think it's $500 a year, right? And that's it. That's the only fee that you pay. But with that, you can email the guy, hey, can I do this investment?
Right.
And they'll send you resources. They'll tell you the answer, or they'll send you resources. So you can find, before you make any investment, you can ask them, run it by them. Is this legit? Is this above water the way that I'm doing it? This is what the deal I'm going to do. Like for me, when I wanted to buy Bitcoin, they told me the links to go set up institutional account, right? They told me how to do it. Now I have an institutional account set up that I can literally transfer money from my retirement into this and back.
Right.
I can take Bitcoin money that now Bitcoin's gone up, right? Double, it's tripled from what I bought at. I can easily move it into back to my retirement account tax-free. That's powerful.
That's powerful.
I can take the money out of Bitcoin and be like, hey, I got this great real estate investment I want to get into. I can pull money out of that and go and put it into a real estate deal, all with your retirement money. So I don't know. To me, I love it. You know, and I think that this
That was great.
this is a
That
game
was a great
changer.
combo.
Yeah, I mean, that's exactly what I was thinking. Like the only disadvantage is a lot of personal responsibility that comes with it. You got to do your own research.
Due diligence. Yeah.
I mean, it's not like a pension program that you have guaranteed coming. You got to be serious about where you're going to, where your money is going to come from when you get old. Basically, I mean, you got to have some kind of plan, and real estate is a solid plan. It's not going anywhere, guys. I mean, everybody needs a place to live.
It stood the test of time, right?
Yeah.
It stood the test of time. Real estate we didn't just make it up. Real estate has made more millionaires in this country than any other business out there. And that was said by Dale Carnegie in the 1800s, or Andrew Carnegie in
Andrew
the
Carnegie, yeah.
And that still remains true today, right?
Yeah.
So
True.
it's 200 years later, and it's still the same. It's still the same thing. Is real estate is the way to the most predictable path to building wealth in this country. Period.
90% of all millionaires have made their money in real estate.
Yeah, yeah. So it's like, well, we need to allocate more. All right, guys, we got a long time today. I'm thank you guys. I don't want to keep you guys. I want to be respectful of your guys' time. If you guys have got any value from this, please drop a fire emoji for
something.
Please drop a fire emoji, please. Thank you guys. Wonderful guest. Added a lot to this conversation. Thank you so much. We're gonna have you guys back again soon.
Absolutely, absolutely.
Yeah.
It was great, Johnny.
Yeah, thanks for
All
being
right, good, great. It was a great time, man. Talked a lot, and I think people got a lot of value out of the conversation today from all the retirement options.
Sure did. Yeah, I agree. All right, guys. Until next week, take care of yourself.
Bye, everybody.
To quote the great Jerry, take care of yourself.